Israel, the unicorn nation, where new startups have seemingly regularly popped up at valuations of over $1 billion, thus earning the unicorn moniker. But are unicorns all they're cracked up to be, or should we be looking instead for centaurs? With me to discuss is economic consumer behavior expert and assistant professor Vili Abraham. Vili, it's great to have you with us. Now, first off, is unicorn a vanity metric, and if so, why?
Well, there are a lot of cases where unicorns, which are valued by investors to be $1 billion or more, as far as the valuation is concerned, where there were complete failures. Usually, unicorns are valued so high because of hype, because of expectations regarding future gains. And many times these companies have never reached any milestone, and they haven't even made a dollar. So that's why, they're quite risky, and there are a lot of examples of unicorns that failed miserably.
So what examples of unicorns have turned out to be poor investments like you just mentioned?
All right, well, if we look at Israel, as of today, there are 25 centaurs, but if you look at unicorns, there are several, or I'll list five that were complete failures. There's Quibi, Evernote, Zynga, and Power Technologies, which is an e-commerce company based in London. And these unicorns, they caused billions of losses to their investors. So it was really risky companies, which were, the investors were really hopeful about them, but unfortunately, they failed completely to make any profit.
Well, so, what was it about them that was such a failure? And should potential investors avoid unicorns then almost altogether, or is it still worth looking into these companies?
Well, it depends. If you're an investor who, invests a few hundreds of thousands of dollars or millions of dollars in a company, you do it usually based on profit expectations in the future. That's one thing. But if you look at the stock market, I would not invest a dollar in many companies that were, are offered in the stock market and make no profit. And there are many examples where, companies, there was this initial public offering, their valuation increased by 30% after the first day being, in the stock market, but then they fell completely. They're sometimes decreasing by 70%, and many people losing a lot of money. So if we look at companies that you invest in them, as a serious investor, not in the stock market, you have to make sure that they have some, what we call unique value proposition, that these are companies that really stand out in the market, that they're really meeting the needs of customers, which other companies do not meet, and that there was the right marketing conducted, market research, and a business plan. So you need to check things from all angles until you make the decision. So I'm not saying don't invest, but you really have to double check and triple check everything.
All right, so again, maybe walk us through now the difference between a unicorn and a centaur. And you of course already mentioned that there's 20-something centaurs in Israel.
25.
25.
Yeah, 25. So a unicorn is really a company that gets $1 billion valuation based on investors. They think that this is what it's worth, despite the fact that it hasn't even brought in a dollar. If you look at centaurs, these are companies that have what we call a returning revenue of at least $100 million. It means that these are companies that usually have thousands of customers, and they have products that do meet the needs of the market, and they have returning customers. So you know that for sure. You have subscribers. Let's say that you are selling some app. You know that you have a certain number of subscribers who are returning clients, and you can know, with let's say 95% confidence that these will be returning customers the next year, the following year, and the following year. So there is income.
Right.
So I think it's a lot more reliable.
So they're a less risky unicorn, or they're not necessarily unicorns to begin with?
Well, unicorns are, to begin with, risky because they usually don't bring in a dime. So that's why I think the proposition to consider centaurs as ones that are more reliable.
Why are they valued so high if they're not bringing in any ROI?
There are some companies on the stock market today in different fields. For example, in the electric vehicle field, without mentioning any names, companies that are competing with Tesla, for example, they haven't really brought in any profit. They're losing money, but their valuations are in the billions of dollars, and they have crushed. And if you look at their valuation, it increases and decreases on a daily basis based on sentiment, based on some article that was published about, some manufacturing plant that is going to be opened somewhere. So usually the valuation is based on sentiment and expectations regarding future profits, but not profits that have been earned currently or today.
So is investing in a centaur arguably more expensive? Just the initial investment to buy stock in a centaur, is that more expensive, or are you essentially claiming that it's less expensive because at least there's a return?
Well, I would say that would be more expensive because, if the company starts making money, then the stock price increases. But I think that the risk is much lower because you know that you're investing in a company that maybe, in one quarter made some, less money. But overall, it's a company that is expanding. It has more subscribers, more companies. It's expanding worldwide. And that's why in the long run, okay, we're not talking about day trading, but if we look at the long run, definitely a stock that you can invest in because you know that there's a profit. If there's no profit, it's really, really risky because these are stocks that really bounce, increase and decrease almost on a daily basis. And it's really, really risky unless you have a lot of money that you can risk. But most investors don't have that money to risk, especially if we're talking about the stock market.
All right, Dr. Vili Abraham, thank you so much again for joining us.
It was a pleasure.